Hello there, welcome to Financial Accounting L4. Today we want to look at the question paper of October 2020. We are going to look at question 2 on the question paper, that is on the preparation of cash receipt journal, cash payment journal, and also the bank account. And finally, we want to prepare the bank reconciliation statement. So this is what we have, question 2. So if you come here, you see that this is our question 2. And it reads, the information given below was extracted from the books of Tegu Traders on 31 October 2019, the business bank with Baroda Bank. And then on the third part, first part 2.1 reads, make supplementary entries in the cash receipts and cash payment journals and close the bank columns of all journals. Second part, post to the bank account in the general ledger and balance the account. And lastly, prepare the bank reconciliation statement on 31 October 2019. So what is important to know is that the balance that we are going to get in the bank reconciliation, that is the final balance after reconciling, would be the same with the balance that we are going to get in the bank account. That is how we can see whether we have done it correctly. If we prepared our reconciliation correctly, we can just check our final balance in terms of reconciliation and then the bank account. If we have got the same balance, it means we have prepared correctly. So we are going to see as we go after preparing that our balance is the same. If they are the same, that means we have done it correctly. So we are going to start on the supplementary entries in the cash receipts journal and cash payments journal. So you see that this is our answer section. Let's go and see what we have in terms of our answer section. So this is our other section. We are going to start with the cash receipts journal for Tega Traders on 31 October 2019. We've got our columns that are there. So we are going to fill in our column. So obviously, we are going to start with the opening balance. We are going to start with the opening balance. So you will see that at the opening balance here, we are going to write here totals brought forward. Just total brought forward. This is the total for the cash receipts journal. So we can just call it a total that has been brought forward there. Then we are going to check the date and then the amount of that total there. So we can go to the question to see what we have in terms of cash receipts journal. So this is our, let's try to see what we have in terms of cash receipts journal. So we are here. So it means our balance that we are having for cash receipts journal, it's here. We are having 63,519, 63,519 here. So we are going to start with 63,519 as our opening balance for the cash receipts journal. So we go to our cash receipts journal and put 63,519, and then on the date part, also we need to check that our date is there. Our date there that we are using. Remember all these entries are being done at the end, which is the 31 October 2019. So we are just going to use our date 1, our date 31. So this is how we're going to enter them. We go to our answer section and enter as such. So we are here. So we are saying our day is 31. And then as for bank, the amount that we are having there, 63,519. 63,519. So these are opening balance for cash receipts journal. Then we can also check the balance that we have for cash payment journal, so that as we enter the entries, we can go to the cash receipts or go to the cash payment. So we go there and check what we have in terms of our cash payments. Cash payments is here. So on our cash payments, our opening balance is our 88,977. So we are going to enter that again, 88,977. Go on the cash payments section. So here the cash payment journal is below this one. So here is our cash payment journal. So we are just going to do the same by showing the opening balances that we have there. So on the day part, Remember, we are using that one. And then uh, here on this section, we now write the total brought forward. And the amount that we checked there was 88,977. So this is what we have. Then we can go back to see now our adjustments, where should we post them. So we are going to determine whether that transaction applies to the cash payments or cash receipts or not. So I will come here, you see that the bank, first one is saying the bank account of table trader show the debit balance of 64,407. You are going to enter this in the bank account. You skip that. And then a bank statement shows the fair variable balance of 160. This is going to be the opening balance in the bank reconciliation. So this one, bank reconciliation, this one on the bank account. So this is what we have. Then on item 3, the following checks were not yet presented for payment on 31 October 2019. So we are given that, we are given those checks, and they are being highlighted as not yet presented for payment on 31 October 2019. So it means these ones are going to affect the bank reconciliation. So we can skip them at the moment, and we check what we have next. Then on item 4, a deposit of 117,490, a deposit of 170,490 did not appear in the bank statement of October. Did not appear on the bank statement of October. So what are we going to do with this one? Let's try to see what we are going to do with that one. So it means this deposit it was already issued as a deposit. So whenever it is issued as a deposit, it will be already recorded in our journals. So it's there in the cash receipts journal, but it's not yet recorded on the bank statement. So it means we are going to adjust it in the bank reconciliation statement. So we can, as for now, we can skip that one. We are going to adjust it in the bank reconciliation. Then we can just indicate there so that it becomes easier when you come back. This one, bank reconciliation, and we said this one also should go be adjusted in the bank reconciliation. So we are going down and see what we have next. So go to the next one. We are now on 5. So on item 5, it reads a check of 118 118,198 received from a debtor. B. Munei was dishonored by the bank due to insufficient funds. And then this one is a dishonored. It means we are supposed to adjust it in the journals, but we cannot adjust it in the bank because in the bank because it's not going to affect anything because in the bank reconciliation, in the bank account, it was not recorded and it was dishonored, it was rejected, so it wasn't entered there. So it's not going to affect the bank account in terms of the bank reconciliation. But whenever we issue a check, we record in our journals. So it means when it's not dishonored, it has been rejected, so you have to remove it. So this is what we have in terms of 11,100 198. So we were receiving it. It means it was recorded in the cash receipts journal. Initially, it was recorded in the cash receipts journal since we were saying we are receiving money. But now it was dishonored. It means you have to remove it. So by removing it, we go to the cash payment journal. We do the opposite. If it was a bank account, it was supposed to go to the debit side of the bank account. So by removing it, we go to the credit side where we put our payments in the bank account in our ledger. So we are going there and put on the cash payment journal 11,198. So we go to the cash payment journal. We go to the cash payment journal and see what we have. This is our cash payment journal. So we are going to enter that one, which is our it's VMUNE. And the amount is 11,198. 11,198. And remember, this person was a data, was a receipt that was being received from the data. So we are going to put it in the data control column, 11,198. So this is what we have. Then we can go on and check what we have next. So from 5, we are going to 6 here. So 6 reads the bank statement showed the following charges. So it means these ones were on the bank statement, but are not appearing in the bank in our journal. So these are payments. These are payments. So they're going to go to the cash payment journal. And if you see in the description of these items, we've got service fees, cash handling fees, checkbook. So all these are bank charges. So they are bank charges, and we need to add them all to that to get the total and put them as one figure. So if we add them there, we are going to get 837. So we can go there in the cash payments journal and put our 837 as bank charges. We can go back to check on the here. We are now here. We are saying these are bank charges, and here on the description, we are paying to the bank. That's the payee. And then the amount, we got the total of 837. And we are going to put them under sundry amounts because they are not debtors. So we are going to put here under sundry amounts. So we are having 837. So on the description, remember they are bank charges. They are bank charges. So that is what we have there. So we can go on to check what we have next now. We can go on to check what we have next. So from the bank charges, we are going to the next item. So the next item that we are having there is item 7, and it reads check number 112 has expired. It was issued to Meliso Suppliers, a creditor. Check 112. So check 112, we are going to find it there. That's where we have the check 12. It's being said it has expired. So it means it was originally issued as a payment, but it has expired. It means we have to cancel it off. We have to cancel that check. So that's the issue that is there. So the check that was cancelled is this one, which is 112, is 13,848. So originally, when it was issued, we recorded it in the in the cash payment journal. So to cancel it off, we go to the opposite side, we go to the cash receipt journal and enter it so that we are canceling it. So let's go to the cash receipt journal and see what we have there in terms of the cash receipt journal. So we go to the cash receipt journal. So here we are entering it under cash receipt journal. So we are saying it's a check. It's a check that we are canceling. It is, let's just check the amount there. The amount is 13,848, and it was a check to a supplier, and Dumo Suppliers is the one that we have a check that we are canceling. So here the description is Dumo Suppliers. And the amount that we are having is 13,848. So this is what we have. This is what we have, and this is a creditor. So we are going to put it under creditors. It's 18,848. 18,848. So this is what we have. So we can go down to check what we have after that one. Now we are on item 8. Item 8 reads a check for 5,914 received from a debtor or bond was dishonored. And then it is written again because it was dated 31 December 2019. So remember our period is ending. Let's just check where our period is ending. Our period is ending on this date, which is 31 October 2019. But this check is the date of 31 December. So it was a post-dated check. So what happens is this a post-dated check, we don't cancel it off in the journals. It means this check was already recorded in our journals. It's there in our journals, but we cannot cancel it off in our journals because it's going to be cash there at the bank. So what it means is in the journals, we're not going to adjust anything. But since it is expired, it means it was already recorded in the bank statement. So it has to be removed there in the bank statement. So in the bank statement, they're going to adjust it in the bank reconciliation. So we can leave it for now and then adjust it in the bank reconciliation when we reach the bank reconciliation. So what we are saying is this transaction, we are going to adjust it in the bank reconciliation. So this is what we have. So we can skip that one and go to item 9. The bank statement showed a deposit of 35,400. It was paid directly to the bank account of Table Traders by J. Richard Mueller in respect of the rent. So it means this is not recorded. This is not recorded in the dollars because it was paid directly to the bank account. So we need to put it in the receipt dollars, which is our 35,400. 35,400. So we are going to enter that one in the cash receipt journal. So it means this deposit is going to come here under the cash receipt journal, and it's to J. J. Rashalumela. And then the amount is 35,400. And it's not a creditor, so you're going to put it under sundry accounts, sundry amount. So you're saying 35,400. Then on the description, remember it's rent, so you're just going to say rent income. So this is what we have. Then we can go and check what we have next. So we are here. So we are going to item 10. Check number 121 was incorrectly entered in the cash payment journal as 5,175 instead of 6,525 as appeared on the bank statement. The check was to value wholesalers for trading stock. So what does it mean? It means that the amount that we entered in the cash payment journal is lesser than the actual amount. This is a wrong amount, which is less than the actual amount of 6,525. So what does it mean? We have to enter the extra amount in the cash payment journal so that it reaches 6,525. So we're just going to find the difference, 5,525 minus 5,175. So if we calculate that one, you'd see that's the answer that you are going to get there. Let's try to calculate. We are having 6,525, and then we subtract 5,175. The answer that we are going to get there, we are going to get 1,350. 1,350. So here we've got 1,350. So this is the one that we are going to put in the cash payments journal. So we can go there and try to see what do we have there in the cash payments journal. So what it means now, it means we are going to enter it here as our Vele wholesalers. Vele wholesalers. So you're saying here we've got Vele wholesalers. And the amount that we are having there is 1,350. And we are going to enter it under sundry, 1,350. And the description is trading stock. The description is trading stock. So this is what we have. Then we can go back there and try to see what we have next after that one. We've got 11. This is saying the bank statement showed a debit order of 11,490 for an insurance premium paid to My Way Insurers. The bank statement showed a debit order of. So there's a debit order that is there. Remember what happens on a debit order? What is being debited is the bank statement, and whatever is debited on the bank statement is a payment, which is recorded on the credit side of our journals. So when a debit order is processed, it's only processed at the bank. In the ledger, it will be missing. So we need to put it in the ledger. So it means this is a payment. So it's supposed to go to the payment journal, which is 11,490. And you see that the payee is My Way. My Way Insurance is the payee. So you can just go there and put this one. We are here. We are saying My Way. My Way. This is our our payment journal, my way, and then the amount is 11,490. And we're going to put it under sundry, 11,490, and it's an insurance. So this is what we have on this one. Then we can go to the next one. We can go to the next one. Let's try to see what we have next. So if you check there, after that one, we are going to item 4, which reads the bank statement shows the credit entry for the interest on the current bank account of 1,086. So what does it mean? This interest on the current account, it means it's interest that is being received. So it's interest income. So it's going to the cash receipt journal. It's going to the cash receipt journal. And then on the details, we're going to write bank. So we can go there and go to the cash receipt journal. So this is our cash payment journal. So we can go to the cash receipt journal. This is our cash receipt journal that we are having here. So we can come here and enter it as. Here we are saying it's bank. And we've got 1,086. And we're going to put it under sundry. And remember, it's interest income. So this is what we have. So the last item that we have is reading, which is item 13. Tego Traders bank account was incorrectly debited by the bank with check number 132 of 78,515 rands. The check was cashed by Z Tombo. So what does it mean? It means this transaction it's a mistake that has happened at the bank. So I didn't pass through the business, so it's not there in the ledger, in the journals. So we are not going to adjust in the cash in the journals, that is cash receipts and cash payments. We are only going to adjust it in the bank reconciliation. So this is the last one. So we can go and balance our journals there. We can go and balance our journals. So what are we saying? We are just adding there to get the total. I'll just add 63,519 plus 13,848 plus 35,400 plus 1,086. Then obviously the total that you are supposed to get there is 113,850. 113,850. Let's try to see there. In 53, 853. So here we've got 53, sorry, 853 here. We are saying 53. So this is the total for the receipts journal. So we need also to add the total of the payments. We need also to check the payments of. Then on the payments also, we are supposed to add everything. 88,977 plus 11,198 plus 837 plus 1,350 plus 11,490. So the total that you are supposed to get there, the total that you are supposed to get there is 113,852. 113,852. So this is the total for the payments. Then from there now, we are going to the next one, which is the bank account. We are going to the bank account. So on the bank account, we are going to look at the opening balance of that bank account. Opening balance of that bank account. Remember, in the question, we have got an opening balance of the bank account. You can go and check what we have in terms of the opening balance there. We are given opening balances at the beginning of the question. These are the opening balances at 1. At item 1, the bank account of Tego Traders showed a debit balance of 64,407. So this is going to be our opening balance, 64,407. So we come back here and put that balance. So this is our opening balance, and the date is on the first. Here 1, and then we are saying balance. This is our balance brought down. And the amount we are saying 64,000. 407. Then the total of the cash receipts will now come here on the debit side to say total receipts. And date we are going to put that one. And we go back to check the figure for receipts on the journal that we prepared. So you see that the figure for receipts is here 113,853. 113,853. So we are coming here 113,853. Then also here on the credit side, we are going to put our total payments. And we go and check what we have in terms of our total payments. What we have in terms of our total payments. These ones are our receipts. So our payments are here. And the total that we have here, let's check, is here 18,852. So go there and enter that one, 18,852. Sorry, it's 113,852. 113,852. So this is what we have in terms of our total payments. And then from there now we can balance there. If you add the total of the debit and the credit, you see that the greater total there, the greater total is the debit side with a total of 178,260. 178,260. Then we subtract what we have on the credit side, we are left with 64,408. 64,408. So this is our balance CD. So our CDs come here. So this is our balance CD. Then this is going to be our balance BD on the opposite side, below the double lines. So balance BD, 64,408. So this is what we have there. Then we can now go to the bank reconciliation. So what we are saying is the total that we got here, which is this one. So the balance here is should be the same with the balance that we are going to get in the bank reconciliation. So we come here. In the bank reconciliation. This is now our bank reconciliation. This is now our bank reconciliation. So we are also supposed to have the opening balance of that bank reconciliation. So we go back there and try to see what we have in terms of opening balance in the question. So you see that this is the if variable balance of 116. It's here there's a mistake there. It's supposed to be unfavorable. Here it's supposed to be unfavorable. It's supposed to be unfavorable there. So this is unfavorable. Bank statement showed in unfavorable balance of 116,237 on 31 October 2019. So if it's an unfavorable, you know that on the bank reconciliation, it will be on the debit side. It will be on the debit side. So we are going there. And try to see what we have there. It will be on the debit side with 116,237. So we can go there and enter that one. This is our opening balance. So we are here. Let's try to see. So this is going to be our debit side, and this one is be our credit side. So we have got in our opening balance, opening balance. So we are saying it's unfavorable, so it will be on the debit side, which is 116,237. So it means when it's favorable, it will be on the credit side of the bank reconciliation. So we can go back there and see transactions that are going to affect the bank reconciliation. Remember, we were highlighting them that affects our bank reconciliation. We have The first ones are these ones. The following checks were not yet presented for payment, and this one was cancelled, 112. So we're not going to consider it. We only take this one, which is check number 115 and check number 116. We have 12,512 and 8,766. So we are going to enter those ones. They were not presented, so it means we need to put them on the debit side. We put them on the debit side, so we can say debit outstanding checks. Debit outstanding checks. We have number 115, which is 12,512, and then we also have number 116, which is 8,766. So we can go there again and check what we have next, which is affecting the bank reconciliation. We can check what we have there. So it means we are supposed to go down and see what we have. So if you go to item 8 here, a check for 5,914 received from a debtor or bond was dishonored because it was dated on December 2019. We said this one, since it was post dated, it means initially it was processed, so you need to remove it. We had received it, so it was when we received it, it will be on the when we received it. Let's go. Let's read it again and see what actually does it require. So what is supposed to happen there is like this check of 5,914. It's a post-dated check, so it means it has to be recorded in the bank reconciliation. It won't be there in the bank account, but in bank reconciliation we record it. Since in the bank reconciliation we are trying to reconcile what is in the bank, but it's not yet recorded in the bank statement. So this means we are supposed to record it, and whenever we receive, we credit in the bank reconciliation. So we are going to the credit side of the bank reconciliation and put this 5,914. This is a post-dated check, so we can go there. You can go there and enter this one. So we are saying we are now here. We are saying let's try to see. Let's try to create some space here. So now we are saying credit post dated. Credit post dated check, which is 5,914. We are saying it comes on the credit side, 5,914. And also we can go back and check other, if you've got still other entries that we need to enter in the bank reconciliation. So you see that the only one that we are left with, since we were indicating, is this one of Tego Traders bank account was incorrectly debited by the bank with the check number 132 of 78,515. The check was cashed by Z Tombo. So this one, what does it mean? There was an amount of 78,550 that was debited in the bank account, in our bank statement, but this amount does not was not supposed to be processed in our account. So you need to remove it. So if it was debited, to remove it, go to the credit side of the bank reconciliation and put 78,515. So basically, that's what we are going to do. So we go to the credit side and enter that one. So we are saying credit correction of error. Credit correction of error. So this correction of error is 78,515. So this is what we have. Then we can also create some space there. So what are we going to do there? We are now going to balance it. We are going to balance it there. So if you add the total of the debit and the credit, you see that the credit side is the bigger side with a total. You can see that it's a bigger side with a total of 201. 64,923. 923. So it will come both sides. Then the difference between the total of the credit and debit will come here. Say this one minus this one minus this one minus this one. Then another that you're supposed to get here, we are going to put it here is 64,408. And this one is the debit balance as the bank account. Debit balance. Debit balance. As the bank account. In the bank statement, it's a credit balance, but when you go to the bank, when you go to the bank account, it will be a debit balance. So this is the amount that we said should be the same with the amount of the balance of the bank account. So we are saying it is the same. So we are saying this description is coming in the sense that it's a debit balance in the bank account, not in the bank statement. But since we are reconciling, compare it to the bank account because we want to compare it to the balance of the bank account. So this is what we have. So if we check the balance that we have in the bank account is the same as this one, you can go up there to just cross check. This is the same balance that we are having here, 64,408. So this is what we have, guys, in terms of this video. Thank you for listening. Those who have been subscribed, please subscribe and share. We will meet again in the next video. Let's stay notified. We will meet again. As for this video, I am signing out.